So we're just going to talk about now how you go about managing a short put trade. So with every strategy, there's two stages to managing a trade. The first stage is managing it before you even place the trade, and the second stage is how you manage it when the trade is on. So let's go back to the first stage. And the first thing you need to do is decide on what strike prices you're going to pick when you're doing a short put strategy. And that really depends on your mindset. So if you're of a mindset that you want to own the shares, well, then you pick a strike price at which you're happy to own the shares at. If, however, you're using the short put strategy as a return based strategy, which we do a lot of, and you don't want to own the shares, well, what you do then is pick a strike price that's as far out of the money that will give you at least an 80% chance of winning. And that's really important because statistically you'll have a much better chance of not being assigned the shares or having to close down your trade at a loss later on. So give yourself at least an 80% probability of winning. With interactive brokers in Trader Workstation, you will see what your probability of success is when you go to place the trade. Now we're on to stage two, where you actually have the short put trade on. But what happens if the share price starts to fall and the trade is moving against you and it falls below your strike price? What do you do in that scenario? Well, if you do not want to own the shares, what you need to do is buy back the put option at a probable loss, or you could roll the put option out to the following month's expiry for a new credit. And we tend to do that quite a lot if we still believe that the share price will trade above our short strike price. So all we're doing is extending the time here. And later on in the videos which we show about the trading of these contracts, you're going to see how to roll out a put option into another month. If, however, you want to own the shares, do nothing in that scenario, you will be assigned the shares. And what will happen is after expiry Friday, on the Saturday, you will be assigned the shares. If the trade goes okay and the share price stays above the strike price, if you're at expiry Friday, you have to do absolutely nothing. What will happen is your position will disappear from your account and you'll just keep the full profit. It's as simple as that. However, if before expiry you notice that your position is in 50% of its maximum profit, for example, if you could make $100 profit on the trade and you're now in $50 profit, we would advise that you take the profit. And the reason is experience has shown us that over time, if you keep taking your profits at 50% of max profit, you will do well in the long term. Because while these trades are working out at that moment in time, it doesn't take an awful lot for them not to work out as well. And you don't want to turn a profitable trade into a losing trade. So what you would do is close the trade down. Again, we have a video later on in the course showing you how to close down these trades. The only time you wouldn't close them down is if you had placed this trade because you want to take assignment of the shares. In that situation, you would just let the trade run to expiry.